Welcome back to Investing Talk Podcast. Today, we are zeroing in on one of the most, explosive yet pretty complex sectors in the market right now, digital asset infrastructure.
And specifically, we're looking hard at CleanSpark. For you listening, the question is simple, but it's crucial. Is CleanSpark a good time to buy right now? We've waded through quite a stack of material, analyst notes, the financial reports, market chatter, all of it, trying to give you the clearest possible picture of the company's recent, frankly, dramatic momentum, its underlying strength, and, the risks and catalysts just ahead.
Yeah, our goal is always to cut through the noise, give you the essentials you need. And hey, before we jump in, if you find this kind of analysis helpful, please do hit subscribe and like. It really helps us out. And maybe most importantly, if there's a specific company you want us to investigate in a future discussion, just drop the name in the comments below. We'll add it to our list.
Okay, let's get straight to it then, because this company isn't just, growing. It feels like it's accelerating.
Absolutely. When you look at the recent past, CleanSpark seems to have shifted gears. It's gone from just high growth to something like operational overdrive. It's a story of smart expansion, strategic moves, coupled with financials that just, blew the doors off expectations.
You really have to start with that fiscal Q3 earnings report.
Yeah.
The one from August 2025. It wasn't just a beat. It was a shock. It forced the market to completely rethink how they valued the stock.
I remember the numbers caused a stir immediately. Why exactly was that report such a game changer? What stood out?
Okay, so the earnings per share they reported, 78 cents. Now, the consensus estimate, what analysts were expecting, was maybe around 71 cents.
Wow. Okay.
Yeah, that's $11.71. It's enormous. It signals more than just good management, right? It points to really superior operational efficiency, something few, if any, of their competitors seem to be matching right now. It basically implied they're making way more profit per unit of production than anyone thought.
And the top line, the revenue, that backed up the scaling story, too.
Exactly. Quarterly revenue hit $198.64 million. That's a staggering 90.8% increase compared to the year before. That kind of number. It validates their whole aggressive scaling strategy. When you see almost 100% year-over-year growth in a business like this, which is capital-intensive, commodity-driven, you start paying very close attention.
And naturally, when a company delivers that kind of raw performance, the institutions notice. Confidence builds. We saw that in September, didn't we? With that announcement of the new sizable $100 million credit facility backed by Bitcoin.
Right.
That's flexible capital, accessible money specifically designed to fuel more expansion.
And the analysts definitely took notice. By October, we saw these massive revisions upwards. You mentioned Chardon Capital raising their target from $20 to $30. It's a huge 50% jump in their price target.
Just based on that one report.
Pretty much. Driven by reevaluating the operating structure after Q3.
Yeah.
And similar upgrades came quickly from Cantor Fitzgerald, Needham & Co., others too. This wasn't just, noise. It was the smart money saying, okay, this company has hit a new, higher level of profitability.
Okay, so that strong performance is history now, impressive history. But for the future, we need to know if the foundation is solid. We're seeing this hypergrowth, but is it profitable hypergrowth? What's the balance sheet telling us about, the structure holding up this rapid expansion?
Let's look under the hood then. Their trailing 12-month revenue, TTM, is now at $631.94 million. That's up, 66.8% from the previous year-long period? But here's the really fascinating part, and what really separates CleanSpark from, frankly, most of its competitors. It's the profitability.
Let's talk about that margin. That's the number everyone's highlighting in the reports, isn't it?
It is. TTM net income hit $292.47 million. Now, translate that. Their net profit margin is an exceptional 47.98%.
Almost 48%.
Exactly. Just pause on that figure for a second. Most of their big competitors, the other public miners, they're struggling to keep margins maybe half that size, especially after all operating costs. Right. A nearly 50% net profit margin in Bitcoin mining, which is all about commodity prices and high energy costs, that's not normal. It's really industry-leading efficiency.
So the big question then is this sustainable? Or is it just a temporary blip because of timing or something? Why aren't the competitors hitting those numbers? Is it purely great management, or is there something structural, like an actual operational moat protecting this profit?
I think it's the moat. Plain and simple. Yes, management seems excellent, but that operational edge is absolutely key. CleanSpark is one of the biggest public miners in North America, sure, but their advantage, it lies in the infrastructure itself. They mostly use low-carbon power for their data centers. They often leverage these really favorable long-term power contracts.
Right, and power is the main cost.
That's like 80% of your input cost in this business.
Right.
So having a sustainable, structurally lower cost for energy, that gives you a durable structural edge against anyone stuck buying power on the spot market or using less efficient sources.
So it's not just a nice story for ESG investors, although that helps attract capital, I'm sure.
Right.
It's genuinely a cost advantage. It means they can produce Bitcoin cheaper than the average miner.
Precisely. When you can mine the commodity cheaper than everyone else, you tend to win in the long run. And if we connect this back to the financials, the market cap is currently around $5.63 billion. That strong cash generation, which you see from those margins, means recent reports don't flag any major long-term debt concerns. They seem funded, profitable, and they're executing.
Okay, great performance history, solid fundamentals. Now let's look ahead. For anyone thinking tactically, we need dates. Where should we expect news, maybe some volatility? What's the roadmap for the next, say, 3 months?
All right, we have several key confirmed events coming up. These could be inflection points. First up is October 24, 2025. That's the fiscal Q4 earnings report.
Crucial one.
Absolutely. After that Q3 shocker, everyone, investors, analysts, they'll be watching this report like hawks. They want to see if that massive profitability and high revenue growth are sticking around, or if Q3 was, one-off.
Then we roll into November. Always an interesting month for tracking institutional money.
Correct. On November 18, 2025, we get the big institutional 13F filings. For anyone unfamiliar, a 13F filing basically shows us if the real heavy hitters, the huge hedge funds, pension funds, have started buying or significantly increased their stakes in the company over the last quarter.
So, and big names are piling in. That's a strong signal.
The very powerful validation signal.
Yeah. And then right near the end of the month, November 29, 2025, there's the S&P and ETF rebalancing.
Yes. And given the stock's amazing run and its bigger market cap now, there's real potential here for it to get a bigger weighting in major stock indexes.
Which forces passive funds to buy more shares.
Exactly. Triggers mandatory inflows from those index funds and ETFs. Now, beyond those confirmed dates, the market is buzzing with, let's call them speculative catalysts. They're unconfirmed, but they definitely influence sentiment and how the stock trades day to day.
Okay, what's the biggest rumor that analysts seem to be factoring in? What's the chatter?
The consolidation play. There's a lot of speculation about a potential strategic acquisition. The thinking goes, CleanSpark has great access to relatively cheap capital, a strong valuation. Maybe they look to solidify their lead in North America by buying out a smaller or struggling competitor.
That makes sense. Leverage their strengths.
It could immediately boost their hash rate, their overall mining power, and market share.
Any other big whispers making the rounds?
Well, there are rumors that the existing $100 million credit line might get upsized, expanded, which could fund, maybe another few exahash worth of production capacity, and maybe the most impactful one for future margins. Unconfirmed reports that they're negotiating a large-scale power purchase agreement, a PPA.
A PPA, that's like a long-term contract to buy electricity at a fixed, usually a very competitive rate, right?
Precisely. If they manage to lock in a PPA with even better terms than their current deals, it just further cements that low-cost power advantage. It insulates them even more from future energy price spikes and significantly improves the economics of mining. Again, these are just rumors, but they help explain why the stock might be trading at a premium.
Okay, let's switch gears slightly and talk technicals. The price action itself, it's hard to ignore. I mean, this stock has been on an absolute tear. Sometimes when a stock triples, you feel like maybe the easy money's already been made.
It has been incredibly impressive, no doubt. The stock has more than tripled from its 52-week low, which was around $6.45, to recent highs up near $22.12. That establishes a very, very robust, well-defined bullish trend.
And the key moving averages seem to confirm that strength. It's trading well above both the 50-day average, which is around $12.05, and the 200-day average, around $10.26.
Yeah, that signals strong, sustained buying interest. The general view among technical analysts seems to suggest continued bullish momentum, at least through Q4 of 2025. They see it trading within a kind of bullish channel, maybe between $17.10 on the downside and $24.23 on the upside. And sentiment, overwhelmingly positive. Nearly 70% of current analyst recommendations are strong buy.
Okay.
And the average price target range is tight, between about $22.13 and $22.83.
Let me push back on that consensus, though. When nearly 70% of analysts are screaming, strong buy, and the stock has already tripled, is that sustainable? Or is that just analysts playing catch-up, maybe even getting a bit frothy after the run? What's the downside the street might be underestimating here?
That's that's the absolutely critical question, isn't it? We have to balance the picture. Well, the fundamentals look stellar right now. We absolutely must talk about the risks. The primary risk, the one that always looms over everything in the sector, is simple. Core results depend heavily on Bitcoin price volatility. If Bitcoin takes a sharp, sudden dive, CleanSpark's profitability and valuation will suffer. It doesn't matter how efficiently they mine it if the price collapses.
That's the big sector risk. What about risks more specific to CleanSpark? Things they control or try to control. The complexity of scaling this fast must be huge.
Absolutely. The secondary risks are all about execution and managing that rapid scaling. Look, management has done a fantastic job so far, but building data centers, securing power deals at this kind of speed, it carries significant risk. Cost overruns, delays, integration problems if they do make an acquisition. Investors really need to watch their capital expenditure reports closely, make sure they stay disciplined.
And then there's just the underlying nature of mining itself. The network difficulty keeps going up, right? It gets harder over time.
Correct. That inevitable increase in network difficulty means you constantly need to reinvest. You need new, more powerful mining rigs. That's the constant CapEx cycle. CleanSpark has shown great cash flow to handle this so far, but any slip-up, any failure to upgrade their mining fleet quickly enough, well, that will start to erode that fantastic margin advantage they have. Tag outro.
This has been a really fascinating look behind the curtain, behind the numbers. So if we summarize the overall investment thesis based on everything we've looked at, that stellar Q3, the industry-leading profit margins suggesting a real operational edge, a calendar packed with potential catalysts, both confirmed and rumored, it does paint a compelling picture.
Yeah, I think we'd summarize this with a pretty high bullish rating based on the sources. The company has managed to position itself as a leader in profitability in what's essentially a commodity business. That's tough to do. So the stock looks potentially suitable for, both sides. Short-term tactical traders playing those upcoming dates, and maybe long-term holders who want exposure to a highly efficient leader in the blockchain space.
Okay, so to leave everyone with a final thought to chew on as they consider this, given CleanSpark's intense focus on profitability, achieved through strategically using low-carbon power and that superior efficiency, how quickly do you think that approach shifts? Shifts from being just a competitive advantage today to becoming an absolute necessity tomorrow, a requirement for all big North American miners just to stay relevant, attract capital, and frankly, survive the rising difficulty?
That's the question, isn't it? The industry is clearly moving towards industrial scale and efficiency. Something to watch. Thanks for joining us for this analysis today. We hope you found it useful.
Yeah, thanks everyone. We look forward to having you back for the next one.